Joining me live now is Shane Oliver from AMP. This is ahead of that rate decision this afternoon. Good to see you, Shane. Of course, the RBA would have a little bit of whiplash like we all have over the last month or so with Trump's trade war and the changing tariff landscape. But what is the likely decision this afternoon?
Well, I think the likely decision is a 25 basis point rate cut, taking the official cash rate down to 3.85%. The money markets have now fully factored that in. I was just looking, they're 99% probability of a 25-point cut. I know there are a couple of economists out there still looking for a 50-point cut, but I think that's unlikely given the lessening in the threat from trade, given the back down by Trump and the pauses on the tariffs. But by the same token, we have seen inflation come down. We have seen growth remain pretty weak. Consumer spending looks pretty weak in the first quarter. And all of those things, I think, suggest that there is scope there for the Reserve Bank to cut again at a time when interest rates are still above levels that you would regard as normal. So I think we will see a cut. Obviously, the Reserve Bank probably will be fairly cautious in terms of what it signals about the future, but I think we'll see probably a couple more cuts after this as well.
Yeah, what are the risks in the economy? Because of course there'll be some members of the RBA board that will be a little bit cautious about signalling further cuts this year, because that in and of itself does tend to change behaviour a little bit. What are the risk factors in our economy?
Well, on the downside, obviously, there's still a hit coming through from trade. The tariffs imposed by the US, even if they stick where they are right now, that's about 40% on China, 10% on the rest of the world and various sectoral tariffs. That's still about 5 times higher than it was last year. So there'll still be a hit there trade. We've got very weak consumer spending. Australian consumers seem to only want to get out there and spend big when there's sales or discounts on, like we saw with Black Friday last year. And investment spending, I think, will remain pretty weak as well, given the uncertainties. So they're all on the downside. The risk on the other side is that we've got very low productivity growth. And still a relatively tight labour market with unemployment around 4.1%, which the Reserve Bank would interpret as meaning they don't need to rush into these cuts. They can afford to be gradual. And of course, that productivity issue is a long-term one. It can't be addressed by the Reserve Bank. It has to be addressed by the government. But it's unclear as to when that situation will start to improve.
Yeah, so rates in the past have come in a bit of a flurry in succession, but it seems like the RBA is signalling that, you know, and economists are saying, like yourself, are saying perhaps 2 or 3 cuts this year, but they may not come in succession. So is the RBA cutting, waiting to see the effect and, you know, those overseas factors that, of course, you can't control, like Donald Trump, and then seeing where the inflation goes and where the economy's at? Is that the pattern we can expect?
Yeah, I think that's right. You are right. The normal pattern is you do one cut, you often do another cut at the next meeting. And on the way up, of course, we saw each successive meeting have a cut until later in the tightening cycle. And at some point there, those cuts were supersized, hikes rather, those cuts were supersized hikes of 50 basis points. So the Reserve Bank was in a hurry then. And the President's not in a hurry. If the economy was collapsing, unemployment was surging and inflation was coming down a lot faster, heading below target, then they'd be moving a lot faster. That may still happen. It's still a risk out there, albeit a relatively small one. But I think we're at a time here where they can gradually adjust, do a cut, see what the impact has been, and then wait 3 months and then maybe do another one. So I think we're in this sort of slow pattern for some time. Obviously, that could change, but it would require some sort of shock to the system for that to happen. Either the economy suddenly takes off again, then we forget about rate cuts. I think that's unlikely. Or alternatively, we accelerate to the downside, perhaps, you know, with the trade threat accelerating again. But time will tell on that.
Well, first things first, we look forward to that rate cut this afternoon. 0.25%, as you say, is most likely. Shane, thanks so much for your time, as always.
Thanks, Laura. Take care.